Hey everybody, Vic here coming at you during lockdown on the 401k rebalancing, and I'm ready to go back into the market now. Today is a down day. So far it's down 1,400 points, and I'll show you why I'm going to go in today. It's 2 days in a row that's down. I missed one of the upswings. I'm sorry about my hair, but the pandemic has me in lockdown. Oh wait, actually I heard it's opening up today. I'll be right back. Fresh back from the barber, as you could tell, but I still got that 70s look on me. But anyway, so looking here, as you know, with the pandemic, the market kept going down. I got out at around 27, 26 or something like that on most of my 401ks. And this red line was sort of a hypothetical on how I was going to follow the market. And since I got out somewhere around here, and I'm not sure when you got out, but I talked about that anywhere I got in below this line here, I was selling high and buying low, which was cool. So I got into some of my 401ks somewhere around the 22 mark. You know, that going down to 18,591 kind of scared me. That would have been the ideal time to get in, but you can't time the market. So, and as I mentioned to you, I'm only a personal investor. I'm not an investment advisor. I'm not certified in any type of accounting or financial advisory, so you shouldn't be listening to me anyway. I'm strictly showing you what I did with my 401ks and how I went ahead and tried to sell high and buy again low. So I got into some of my 401ks at this point here. One of my other 401ks I'm going to get in today. Why? Because what happened was that the market really progressed up pretty quickly, and at that point I felt it was too late, and I was waiting for it to take a downturn again, because we went back up to 27,572 on June 5th. So here I am, June 11th now. Let me just kind of raise this a little bit. Today is June 11th, and the market is down so far 1,400 points. Now, it was down yesterday also several hundred points, and I feel that this is a good time to get in because I feel the market's going to close somewhere around 25. Okay, so I'm still buying below the 27 that I got out. I'm not buying as good as when I bought in at the 22, but I didn't want to buy in again at 27, so it's going to close today at 25, and I've got to trigger these trades on the 401k before the market close, and I'll show you why. Let's jump on over to my other window. So I pre-logged in so you wouldn't have to see my password, as nobody wants to see my password. And these are the options that you got when it comes to the rebalancing. So you can do change investments, and this is choosing where your future investments that they're going to make into it will go. Exchange one investment or exchange multiple. What we want to do is exchange multiple. So now we're going to go into multiple rebalancing. So yours is, depending on which broker you're using, they might have something similar, but you want to do is many for many is what it's going to show up as. Okay, so you click on that, and it should come up and tell you about rebalancing. Okay, so I'm going to, here it is, start my rebalance. Okay, and pick this one, perform the rebalance. And these are some of the funds, okay? And what you've got to do is you've got to get this done before the market closes if it's a down day and you want to be in that day's down. Why? Because what happens is that if I go in after the market closes today, then at that point, when I go in after the market closes, I am not going to buy into those 401k funds until the next day's market close. So if I want to go in with today's market close, I've got to go in before the market close. So even if I get my trades in by 3:59 p.m., 1 minute before the market closes Eastern time, at that point, as long as it was executed, okay, I will get that day's close. And now I'm at 100%. So at this point now, it says you're about to move your balances. So once I click next, It's going to show me what I plan to do, and if there's any errors in mine. My reason for going into multiple different retirement funds, because I feel that the target retire 2025, which is maybe made for a 60-year-old, is going to be more conservative than a target retirement fund of 2060, which is made for a 25-year-old, where now you can take more risk and therefore potentially a higher upside. I'm not an investment advisor. You should take the advice of your investment advisor, financial planner, CPA, or whoever you use, and do things that way, because if you play with your own 401k, you can go ahead and get worse results by playing with it than letting the experts who manage these funds do it for you. So with that, hope to see you on the next one. Comment and like